Hello and welcome to the latest video update for Henderson Far East Income. Today I'm joined by the Portfolio Manager, Mike Curley. Mike, thank you for joining me today. First of all, what can you tell us about the activity for the portfolio over the year to date?
Year to date, we haven't really changed that much. What we had for Q4 and for most of the second half of last year hasn't really changed into Q1. So the focus is really on domestic consumer-related plays. China, and as China grows, the consumption story in China grows, then that has benefits to other stocks across the region. So we've taken positions in things like Treasury Wine in Australia, which sells wine into China. Sands China, Macau, again, all about greater spending in China, making its way across the region and in the market itself.
So the portfolio has an active share ratio of roughly 85%, meaning it differs to the benchmark by about 85%. So can you talk us through some of those differences?
The differences are really in style. So the broad FTSE All World Asia Pacific ex Japan Index will include lots of stocks which don't fit the remit of Henderson Far East Income. So some of the big technology stocks which don't pay dividends, Tencent being a prime example. It's obviously not held in Henderson Far East, but is a big part of the index. There's other stocks clearly which we own, which are mid-cap, which are bigger in our funds than they would be represented in the indices. So that makes a difference. And the way that the fund is structured and the portfolio is structured leans us more towards income, which again is more prevalent in the portfolio than it would be in the corresponding index. The other difference is size. So we have a focus in Henderson Far East towards mid-cap, less so on large cap. So again, that would make the active share relatively high compared to the index.
So as we're at the end of the first quarter of 2019, what can you tell us a bit more about this from your perspective? Have you been positioning or repositioning the portfolio in any way at all?
Just looking at two of the ones I mentioned earlier, Treasury Wine and Sands China, they're roughly 2.5% of the portfolio. The representation of the index will be somewhere way short of 1%. On the other side of that, Tencent is 3.5% of the index and we own 0. So it's those kind of differences which make the active share higher.
So needless to say, the past few video updates we've spoken about the trade war between China and the US, and it's still something that continues to rumble on. What can you tell us as we are now at the end of Q1 of 2019 about this from your perspective and any repositioning or changes to the portfolio that you might have made?
The trade war, you're right, just keeps going and going and going. Fortunately, I think the rhetoric between the US and China is getting softer. So the extension of the deal past the 1st of March, we still don't quite know what that means. What it does mean is that no new tariffs have been imposed, so we've got to take that as good news. In terms of what we do in the portfolio, my personal view is that although the trade war, the expectation is that it'll end better than people hope, and the markets are reflecting that. My personal view is that the US and China will be at loggerheads now for one reason or another for the next 5 or 10 years. So the portfolio is very much structured towards the domestic Asian story, and within China specifically, we're looking at domestic stories within China. So our exposure to trade and trade-related issues, and even really some issues between the US and China, the exposure is pretty minimal.